Elon Musk says Bitcoin at risk of falling below $40,000. Bitcoin price could resume its downtrend if the Fed keeps on hiking rates against the prospect of a rising employment rate. Bitcoin has rebounded by 20% to almost $22,500 since September 7, but bull trap risk abound in the long run as Elon Musk and Cathie Wood sound an alarm over a potential deflation crisis. Cathie Wood, deflation in the pipeline. The Tesla CEO tweeted over the weekend that a major Federal Reserve interest rate hike could increase the possibility of deflation. In other words, Musk suggests that the demand for goods and services will fall in the United States against rising employment. This is the Elon Musk tweet. A major Fed rate hike risk deflation. Typically, rates hikes have been bad for Bitcoin this year. In context, the period of the Fed raising its benchmark rates from near zero in March 2020, 2.25% till 2.50% in August 2022. Has coincided with BTC price declining over 50%. To this point, the labor sector has been very resilient. Nonetheless, the latest Bureau of Labor Statistics report shows that the jobless rate has been risen to 3.7% from 3.5% in the August. Even Alphabet warned that they could turn to layoffs soon to stay 20% more efficient. But Fed Chairman Jerome Powell has asserted that the central bank could hike rates further to bring inflation down to their preferred target of 2%. As of July, the US Consumer Price Index (CPI) was 8.5% year over year. The August inflation data is scheduled to release on September 13, with a Reuters poll of economists predicting it would fall to 8.1%, citing a recent drop in the energy prices. This is still far from the Fed's 2% inflation target, which according to David Bunchflower, a former Bank of England rate-setting committee member, will lead to a hard landing. Thus, a hawkish Fed could usher in rising joblessness and an economic recession, similar to what Musk predicts about deflation. Along the same lines, ARK Invest CEO Cathie Wood, who sees Bitcoin hitting $1 million by 2030, cited the latest Manheim data, noting that the used car price dropped 4% in August and roughly 50% in 2020. The metric again indicates warning consumer demand. This is Cathie Wood tweets, deflation in the pipeline headline for the PPI, CPI, PCE deflator from past COVID price peaks. Lumber 60%, copper 35%, oil 35%, iron ore 60%, TRAM 46%, corn 17%, Baltic freight rate 79%, gold 17% and silver 39%. Bitcoin could feel the pain of a deflation-led recession, with Ecoin metrics analysts and suggesting that companies with cash holding would not dip their toes in a volatile asset until the economy has bottomed. He explained, from 2020 to 2021, there is a large number of new entrants in the space of digital assets, which pretty much doubled the total holding in treasuries. And as the market slowed down, everything stopped. Retail investors could follow a similar strategy, notes Forbes-backed investment services. In other words, higher borrowing rates would increase the flow of people's monthly income toward debt repayment, decreasing their cash allocation for riskier assets like Bitcoin. Now let's talk about Bitcoin going to $14,000. Macro fundamental may also trigger Bitcoin's bearish techniques to play out, particularly on the daily chart. Bitcoin appears to have been forming an inverse cup and handle bearish reversal pattern, confirmed by a flipped U-shaped price trend followed by a short uptrend, all atop a common support level called a neckline. As a rule of technical analysis, Inverse cup and handle patterns profit target is measured after subtracting the neckline level price by the maximum cup's height. Therefore, from a technical perspective, BTC price risk new multi-year low below $14,000 in 2020, down about 37.5% from September's price. Moreover, FibFib, creator of trading suit Decent Trader, who accurately predicted Bitcoin bottom in 2018, told that BTC can drop as low as $11,000 later this year, based on the historical volume around this level. As it stands, the price of Bitcoin is heavily correlated to the legacy market, in particular the Nasdaq, which we know is under huge pressure due to the Federal Reserve's monetary policy. He explained, so this time it is a bit different due to the high correlation and external economic forces. If you are a trader and investor and want to get updated regarding crypto market news every day, then subscribe to our channel and support our effort to keep you up to date and invest smartly.